Resilinc would like to welcome all of you to our webinar today, How to Manage Commodity Price Volatility with Resilinc's CommodityWatch-AI. My name is Katie Rodgers, and for those of you that don't know me, I am Resilinc's Senior Product Marketing Manager. I will be your host today as well as one of the speakers. Before we get started, I'd like to cover just some quick housekeeping. All of you will be placed on mute, as you currently are for the duration of the webinar. But if you have any questions or comments, please feel free to submit it via our Q&A or chat boxes at any time. At the end of the webinar, as time permits, we will answer your questions in the order they were received, and we'll do our best today to cover all of your questions. But if not, we will follow up with you afterwards. Also, please note, we are recording the webinar and it will be available to you after the conclusion of the broadcast. Next slide, please. So as you can see, we have a lot to cover today in showing you a live demonstration of the platform, along with discussing some of the interesting indicators and commodities we are currently tracking. But to kick things off, I welcome our CPO, Sumit Vakil, to provide insight from his perspective on how we got here and where our supply chain and supplier ecosystem is headed. Next slide, please. So welcome, Sumit. Sumit is our Chief Product Officer and co-founder of Resilinc. As CPO, he is responsible for Resilinc's product and technology vision, direction, and delivery. Sumit has 25 years of experience bringing innovative technologies to market and has served in leadership roles in both product management and engineering at successful startups, as well as Fortune 500 companies such as Brocade and Cisco. Welcome, Sumit. It's a pleasure to have you.
Thank you, Katie. I'm very excited to be here today.
Next slide, please. All right, so while we have you, I'd like to pick your brain, Sumit. First off, what are some of the challenges for the supply chain and the procurement practitioner historically that you've seen and the impact it has had today?
Okay, so historically, and actually even today, supply chains have been starved of investments in technology and data. Most supply chain organizations today, they continue to work with tools and data from the last century, though they may no longer be relevant. So over the past decade at Resilinc, we have made extensive investments in applying the latest in technology trends like AI, natural language processing, big data to solve some of the most difficult problems in supply chain. We also invested very heavily in building out a vast repository of data that brings unprecedented insights into supply chain operations, how suppliers operate, how suppliers react to different situations, meaning we're especially bringing data together that fall outside the traditional corporate walls.
Very nice. So playing off of that, I guess, in thought process, why did Resilinc develop CommodityWatch?
So let's start with talking about rare earth elements, precious metals, traded commodities like gold, silver, platinum, etc. Sets of chemicals, even paper. These are all precious resources today, and they're very limited supplies. What's happening is that we have this situation with limited supplies, but there is this competition, intense competition that spans across industries. Because a lot of this material goes, across various different verticals in terms of usage. Now, alongside with that, what we are seeing is that the production and supply of many of these materials are controlled by a few companies or governments. So then any changes in consumption patterns, regulations, M&A activity, geopolitical situations, etc., tend to have this big disturbance, cause this big disturbance in price and supply. And again, because all these industries are using these materials, then you feel the impact across industries. Certainly, that's what we are seeing today. So we started looking at this challenge actually a few years back now. So it kind of predates the pandemic. And we looked at it from the lens of not just risk, but how do we take this and create an opportunity for supply chain organizations to benefit from? So the hypothesis we started with was, if we can provide supply chain organizations an advanced view into how prices and supply are likely to change over time, they can be put in a very advantageous position. And this takes us back to the technology and data investment that I talked about earlier, right, to solve the difficult supply chain problems. We took the latest in AI and natural language processing. We used deep learning neural networks to create CommodityWatch, which now provides advanced visibility into price and supply changes of precious metals and other commodities, rare earth elements, chemicals, paper, and so on. And that's how we came about creating CommodityWatch.
Yeah, so you sort of answered a little bit my next question, but if we could dive a little bit deeper in particularly how CommodityWatch helps buyers, commodity managers, and sourcing teams. What do you believe, Sumit, is the Resilinc difference in supporting supply chain professionals?
So for us to deliver that that benefit, right, that advantage to supply chain organizations, it became very clear that the data had to be fresh and dynamic. We're talking about trends here, right? Trends in price, trends in supply availability. So using static snapshots, this is the historical way of doing things, right? Using static snapshots that were generated once a quarter, once a month, it's no longer sufficient. By the time you receive the report, you consume it, you've lost a window of opportunity to take advantage. So waiting, not an option. And so that's one of the main things CommodityWatch delivers. How do you get dynamic, rapidly updating insights into price and supply changes with those materials we talked about? With that kind of insight, category managers and buyers have this advantage now, right? So for instance, they can negotiate advantageous terms when it comes to a future pricing contract. And that is what CommodityWatch delivers on the opportunity side, as I talked about earlier. Now, how do you go about collecting these kind of dynamic insights? So if you were a human being, what would you do? What would you have to do, rather? Right? You'd have to scan millions of sources across the world in hundreds of different languages on a 24/7 basis. So now we've created a huge amount of noise. From that noise, you have to parse out those signals, those key insights that tell you what the trends are, that tell you how price and supply are going to change in the future. And by the way, you have to make sure you understand conflicting information, because this is so common. On the same day, you might hear the price of that material is going up, and then within a few hours, you'll hear something saying the price of the material is going down. So what do you believe, right? When you take all this together, it is pretty obvious that humans cannot do this, right? Yet, because of a lack of investment in technology and data, again, the problem we talked about earlier, many category managers and buyers are forced to do it manually. So now they're spending hours and hours and hours of time just reading and researching, when in fact they should be doing more strategic work in negotiating contracts and helping improve supplier performance. So that's where CommodityWatch steps in. CommodityWatch automates all of this using AI and natural language processing. So we've built these deep neural networks that can scan through all these millions of publications, throw out all the noise, extract the right signals, and just present to the category manager what the future trends look like, so now they can focus on taking action. So this is where it becomes really apparent the value of applying technology and data to solving supply chain problems.
Yeah. So speaking of the future, in being proactive and freeing up time to, be more strategic, where do you see CommodityWatch in the future?
So our vision at Resilinc is to provide this comprehensive and actionable 360-degree insight into suppliers and their performance. Now, traditionally, a lot of focus has been placed on data inside the corporate firewalls, but it is clear, very clear now, that much of the insight that you need to understand suppliers, their performance, their capabilities, comes from data outside the corporate boundaries. And for taking it, for actually collecting that information, synthesizing it, getting intelligence out of it, applications around AI and big data become essential. Without that, you cannot do this, just going by the sheer volume of data. So what Resilinc is looking at doing is we're going to continue our technology and data investments to build out these even more detailed 360 insights into suppliers and their performance, and bring more solutions like CommodityWatch to the market.
Absolutely, I agree. Well, thank you for your perspective, Sumit. For everybody that's listening in, a reminder, go ahead and send Sumit some questions in the chat, and we'll get to those a little bit later. But thank you for joining us. I appreciate it.
Thanks for having me, Katie.
Next slide, please. All right, so we're going to move right along. I would like to invite our next guest speaker, Shahzaib Khan. Shahzaib is our Senior Director of Product and is responsible for driving innovation across Resilinc's EventWatch product family and data services. So under Shahzaib's guidance, the EventWatch family of products monitors millions of news resources daily, alerting Resilinc's customers with well-researched, actionable notifications when supply chain disruptions occur or appear to be occurring on the horizon. With more than 10 years of product and supply chain experience, Shahzaib has worked with more than 1,000 companies across the Global 5,000 with great success in helping advance supply chain risk programs with technologies like NLP, AI, and ML. Welcome, Shahzaib. Take it away.
Thank you, Katie. I'm very excited to talk about this topic, and thank you, Sumit, for covering it so well. Before we explore the details of the CommodityWatch-AI solution, let me highlight that one of our core competencies, as Sumit mentioned, is our ability to innovate our technology. And CommodityWatch also leverages AI and NLP-based technologies to digitize and structure the information into actionable insights. In a nutshell, CommodityWatch offers predictive analysis and proactive visibility into indicators, into variables that influence raw materials availability, consumption, and prices. As we all know, the supply chain of raw materials is volatile and sensitive to so many variables that influence their production, logistics, regulations, and consumption. The predictive indicators and insights this product offers are based on an analysis of 100+ variables that are backed by the curation of historical data and impact trends. From rising energy costs, soaring shipping costs, unexpected production disruptions, new rules and changes in regulations, changes in quotas and tariffs, stockpiling and aggressive buying, fluctuations in currency, inflation and GDP, investors' sentiment and brokers' inventories, geopolitical conflicts, several seasonal and naturally caused situations, and many other variables that have been impacting these raw materials historically and will continue to destabilize raw material supply chains and making it very difficult for manufacturers to remain profitable. It becomes extremely critical for manufacturers to adopt to technologies that offer digitized, analytical, advanced visibility into the future of critical raw materials their revenue depends on. And this is exactly what this product offers. This solution is designed to empower companies, commodity managers, buyers, estimation teams, category leads, risk practitioners, and several other key stakeholders with predictive indicators and insights. It resolves problem of either having no insights or have too much information to process. Of course, that can lead to missed opportunities, missed cost-saving targets, long lead times by your suppliers, and eventually affect your own lead times. There's so much happening, and there are so many situations that affect these raw materials that without the right technology for a human, it becomes very difficult to connect the dots and derive some actionable insights. One question that I often get from the customers and prospects is, how do you know the variables that affect the materials? Every material has a very unique supply chain. How do you handle the real-time processing and structuring of so much information and everything that is happening around the world? To be honest, as Sumit mentioned, it's not possible without the technology. Resilinc has invested extensively in technologies that support artificial intelligence, natural language processing, data sciences, machine learning, data annotation, and curation. And that really is what helped us come up with a product like CommodityWatch. These variables, hundreds of these variables that influence these commodities, the raw material supply chain, they were actually derived from 11 years plus worth of historical machine learning data. Each commodity that we have onboarded has a very unique value chain and, of course, a unique set of variables that influence it. We have so far incorporated commodities including metals, industrial gases, chemicals, rare earth, magnets and minerals, paper, and there are several other that we are working on. It takes time and it takes resources. Some commodities can take up to months worth of effort just to onboard them, but we are very glad with this product and what it's capable of. Once a commodity is onboarded, for the real-time monitoring and analysis, we process over 4.2 million sources that create around 5.5 million data sets daily. Natural language processing allows us to process 100 plus languages. AI models help us classify the data sets, deduplicate them, link them, extract relevant variables and entities, connect the dots between the variables and entities, and come up with a predictive analysis that then gets verified by a combination of people and processes. It's a perfect combination of technology, people, and process that combined together brings out an insight that can be actionable and that can be proactive. If we talk about the current situation, raw material shortages and disruptions are a big concern these days, especially the availability. I've talked to so many customers and prospects, and the situation is so bad that at this point they're not worried about the cost factor. They just want the material to be available. CommodityWatch enables users take well-informed, educated, prepared decisions, especially when it comes to negotiations or maybe renegotiations, cost ratios, cost-saving targets, lead times, inventories, when to buy, when to sell, other future project estimates, and several situations where having proactive insights can put you in a winning position. Your contract renewals, your negotiations with the suppliers and brokers become more data-driven, and instead of reacting or responding late, you have the power to act early. And one thing that I would like to highlight here is that this product also factors variables that actually have a positive influence over raw materials availability. It's not just highlighting the risk situations. There are several factors that influence the supply chain of these raw materials in a positive way. For example, reduced consumption. If big economies like China, India reducing their consumption, or an upcoming auction, for example, the auctions that happened in China in Q2 and Q3 to control the prices. Or it could also be a new capacity going live. It happens a lot, especially in the industrial gases market. The new capacity that is scheduled to go live has a big influence on the gases. Or maybe an easing of shortage or an ease in duties, levies, or taxes, or many other factors that this product is capable of highlighting that have a positive impact on these commodities. With that, I will switch to a demo environment where you will be able to see the CommodityWatch product and the kind of intelligence it offers. CommodityWatch right now is capable of providing futuristic predictive insights for several metals, industrial gases, for some chemicals that we have onboarded. We have also onboarded some rare earth minerals, paper. We are also working on other raw materials, including metals and oil and byproducts of oil. When you log into this product, you will see a trend that is building for every commodity. You will be able to see the number of indicators that this product has highlighted as risk indicators. A risk indicator means the prices are expected to go up. And then there are indicators that are categorized as opportunities where the prices are expected to go down. In both cases, it's actually analyzing the balance between the supply and the demand, the availability of a material and the consumption of material. In all commodities tab, you can filter by the commodities that you're interested in. You can go through the most current developments of the commodity. What are the most recent situations? What are some of the most recent indicators that came out? You can go and do a deep dive into that commodity and every situation, every indicator that was highlighted as a risk indicator. For example, China's power cuts, the energy crisis in China have had a big impact on some of the commodities as a risk. There were several other commodities that were affected by that in a positive way. Some commodities were affected by the energy crisis in a negative way. That's exactly what this product will be able to differentiate. You will be able to see proactively what's happening in the production market where the commodities are produced, what's happening in the logistics sector, what's happening in the consumption market where the most of the consumption happens, and combined together what is the long-term impact on a certain commodity. Market Intelligence tab provides you the most recent developments of each commodity, all the factors that are highlighted as green, or you can see opportunities. These are the factors where this product is indicating that the prices will go down. All the factors that are highlighted as red, they are risk factors, and the product is predicting that the prices will go up. This is the most recent news that came out of Canada for helium, where there are signs of helium shortage in Canada. There are always some neutral factors as well. They are not predictive nature. They are right in the middle. They're important news. They are good to know news. They are not predictive nature. This product highlights such news as market news. Here you can see new variant, the new COVID variant, how it's impacting different commodities in different regions. It seems South Africa is one of the biggest producers in the cobalt market. And if they did not deal with the new variant well, there is a risk to cobalt availability. Several other commodities that have been soaring because of the pandemic in 2020 and early 2021. There have been some opportunities as well, and during the second quarter and early quarter three, the prices have been in a very reasonable reasonable situation where the prices went down. This product was able to predict that as opportunities, and our customers were able to take advantage of those situations. For example, copper, it's been soaring in 2020, early 2021. The predictions early 2021 were that the copper prices will go down by the mid or by the end of Q2, and our customers were able to take the advantage of that. With that, I'll switch back to the slide deck again. Silicon has been one of the materials or commodities that was affected by the energy and emission curves in China. The first time Resilinc highlighted energy issues in China was in December 2020. The situation actually started to get worse by the start of Q2 when further escalations happened. While there were several industries that were immediately affected, for example, aluminium was the very first industry that saw the impact of the emissions and energy curves. Actually, China was at some point trying to push aluminium smelting out of the country. They were offering this industry to their neighboring countries because the amount of energy it consumes and the amount of emission it creates. And silicon also suffered a lot, but the impact on silicon was actually building over time. The beauty of this product is that it's not just it's not just highlighting the big black swan events. Because of the technology, it's also focused on the small little things that can have big impact on the commodities availability. If you look at silicon trend through the through the commodity, there have been several factors that have been proactively highlighted by this product that that have been suggesting that silicon is headed towards a risk zone. Its availability may suffer and the price will start to increase. Throughout 2021, this product has been highlighting factors that have been affecting the availability of silicon even before the energy crisis got escalated, and the prices of silicon started soaring in Q3 and Q4. A good thing about AI and technology-based solutions is that they don't they don't miss or oversee things. Even the small little situations that may not be big initially, but when combined together, they can have a major disruption or major impact in the future. And the beauty of the technology-based solution is that they work 24 hours. They don't get tired. They don't miss things. If we just focus on the silicon factors that this product has been highlighting, from positive economic sentiment in January to Malaysia imposing new duties, the far event at Hoshine Silicon, the energy and emissions crisis in China, all have contributed to the soaring prices of silicon, a commodity we always believed that it's in surplus and will never be an issue. This is a case study of cobalt starting January 2020, the pandemic year. In this, we we compare the directions from commodity watch indicators with actual market prices. What you will notice that there were some red risk indicators highlighted in January and February, and the prices increased in February. The Congo, one of the biggest supplier of cobalt, they were trying to create a government control entity that controls the entire supply of cobalt. That was highlighted by this product as one of the risk factors. And then Chinese New Year, then the virus or outbreak in Wuhan, then shipment, and a lot of delays at ports, a lot of shortages because of the shipments that were diverted, borders that were shut down, Myanmar border that was shut down, a lot of factors that came out as risk factors, and eventually the prices increased by the end of February. Then there were some predictions that came out as green factors, so basically suggesting that the prices will go down. Of course, a lot of projects that shut down, a lot of restrictions, travel restrictions that restricted the development in different countries, especially the biggest consumer, China. So the predictions were that the demand will go down and the prices will go up, and that's the demand will go down and the prices will go down. And between March and July, that's exactly what we observed when we compared with the actual price trend. In Q3 and Q4, several indicators came out as risk indicators again, where smelters were struggling for raw materials, the demand in electric vehicles started to grow, port congestions, and also other factors that were contributing to the risk element and pushing cobalt towards the risk side. And that's exactly what we noticed starting Q3, the cobalt prices starting soaring again. And this is what really, this product adds to the commodity managers, knowledge, to different organizations, risk profiles or risk management profiles. It provides you proactive insights, actionable insights that keep you educated about the future. With that, I will hand it over to Katie again, and thanks very much for your time and joining us for this session.
Yeah, thank you so very much, Shahzaib and Sumit, and all of you participating as well as submitting questions. So we're going to go ahead and try to get to those now. There's quite a few. First question, I think, for Shahzaib is, what are some of the factors that we have observed that have drastically affected certain commodities in recent months?
I think the factors that have affected commodities in recent months are probably known by every risk practitioner. The biggest was the China energy crisis, one ongoing situation that is the congestions at the port, container shortage. But let me highlight some small factors or factors that may not have captured sites or people might have missed them. Is for example the conflict that happened between Australia and China, how it contributed to the soaring prices of coal and the energy crisis. The wind factor, the weather factor in China, how it contributed to the energy crisis in China. And then the taxes and levies and tariffs, and even some countries like, for example, Indonesia recently started planning to impose some export bans on several metals. So all these factors, they are contributing to availability. They are contributing to the soaring prices of different materials.
That's great. I do have another question in here. So does Commodity Watch compare its predictions to real world prices? I think.
That's correct. We, the comparison or the analysis that we do with the real prices is for, to measure the accuracy and the materialistic maturity of these predictions. We do provide case studies if the customers are interested in, just like one I presented for cobalt.
Yep, perfect. Can you explain the timeline, like, how we detect whether a price fluctuation is going to occur in the either the 10 days, the 30, the 60, the 90, etc.
We've, in our exercise of studying each material, excuse me, we identified variables that influence those materials' availability, production availability, logistics, regulations, consumption, and demand. Every variable has a unique nature. Every variable has a unique way of impacting each material, and based on what the behavior of that variable is, how quickly the impact materializes, we predict that how quickly it will affect the price markets. So these are basically a lot of models, AI-based models that were built based on historical impact and impact trends in the past.
Wonderful. This is a little bit of a loaded question, so I'm going to break it down. First is, does Resilinc provide particular customer specific supplier data insights, or is it more an aggregate level supplier performance?
Yeah, let me take that. So Resilinc offers up a very comprehensive set of solutions. Commodity Watch that we talked about today is one part of that solution. So if you look at the Resilinc portfolio in its totality, it actually gives you very specific customized views of your supply chain. And the way it does that is by bringing information together that comes from your organization, from your suppliers, and from the world. So to answer your question, it is actually a combination. So that is this very customized view of your own supply chain superimposed with information that comes from outside your corporate boundaries.
Okay. So in the former, where it provides customer specific data, how does it handle uncertainties with the supplier's competing customer base?
Yeah, so this is where our AI solutions come into play. So we make extensive use of deep neural networks to do natural language processing to extract intelligence out of everything that's happening in the world and applying it to your supply chain. So as much as the disruptions and such would be global or could be specific to or applicable to multiple different companies, we using our technologies figure out what the impact to you will be. So we mix the two together to provide a customized view of impact to you.
Excellent. So this question is also for you, Sumit, so stay on. If we ask Resilinc to add a new commodity, does the tool look back in time to build, a history of that commodity, or does the data gathering start once Resilinc begins to monitor that new commodity?
Yeah, that's a great question. The answer is that if we have to start monitoring a new commodity, we take into account historical data. So the initial training starts with the historical data. And then there is ongoing reinforced learning that happens, which starts incorporating the new data as it comes in over time, meaning going forward.
All right, these last questions are for Shahzaib. So are there any absolutely critical updates going on with particular commodities right now? And in specifically, is magnesium continuing to be an issue, and for how long and why?
Yeah, one factor that I would highlight that was actually highlighted by the Commodity Watch is regulatory change, where Indonesia is planning on implementing some kind of export bans. I would also keep an eye on how China is going to, tackle their internal consumption of some of the commodities that are in shortage. It's possible that China might also go ahead and implement some export bans on some of the commodities that they need to fulfill internal consumption first. Helium shortage is popping up again. Helium keeps going into shortage every year. There are some signs of helium as well. Magnesium is something we are still working on because it's used as a raw material in aluminum smelting and refining. So we do have some insights of magnesium, but the value chain of magnesium is not fully completed yet. It's still work in the progress. But we have been highlighting issues in the magnesium market, especially when it started impacting aluminum.
All right, well, be sure to keep monitoring those for us, Shahzaib. Hopefully we get to a deeper dive discussion in the near future. But that's all the questions that we had today. Feel free to still send us any questions at the conclusion, and we will follow up with you, including the webinar recording from today. But thank you all so much for participating. Those were great questions, and we look forward to seeing you again soon.